Good afternoon traders, and welcome to this live Axia stream where we're going to be reviewing the execution of our elite Axia trader over the July ECB. So there was quite a lot going on in this. I have a much more thorough debrief stream which you can find on the website, which kind of goes through some of the more intricate details of what came out of the ECB, but I'm just going to touch upon the kind of key areas because there's quite a bit of footage that I want to get through. I want to make sure that I have time to do it. So this is the 12:45 statement. So as you know, this is split between 12:45 statement, which is released, and then the presser at 1:30. So we're going to be looking at how he executed over both of these. But really the key thing that I want to pull out of this statement and reiterate following on from the debrief stream is pretty much within the first section, it was largely as expected, and with a lot of kind of dovish pricing going into this event, the expectation was anything in line, we could see a bit of a kind of dovish disappointment and a bit of a sell-off in the bond space as a result. So what we're going to see is how our elite trader executes initially off the back of everything being in line as expected. However, drawing your attention to this top line, ECB says in this context that ECB has tasked relevant Eurosystem committees with examining options, including ways to reinforce its forward guidance on policy rates, mitigating measures such as a design of a tiered system for reserve remuneration and options for size and composition of potential new asset purchases. Now, the three key things to take away from this: tasked relevant committees, the tiered system, and potential new asset purchases. And talking to our elite trader, the thing that he recognised as this come out was that this is something that usually is released during the press conference. It's quite unusual for them to do this during the screen dump. So as the market initially sells off and he got short, he actually scratches that position, but as he recognises this and pairs that with the price action which shows kind of bullish nature to the bond space specifically, he gets long, and we're going to see how he executes around that. The main markets that we're going to see him participate in are the bunds, and he also trades European equities. Now, we have his ladder of the DAX up, but we don't have his ladder of stocks. It doesn't fit on the screen, so I'm going to talk you through when those orders are placed. We'll be able to see them going through on his fills box, but essentially he's trading the bonds and the equities. And just to kind of sum up what we're going to see off the 12:45, there was this initial sell-off as he gets short, and then as the market comes back up through the opening price, he gets quite aggressive and buys for an extended period of time through this period. Now, one thing to note is that the equities lagged quite significantly off of this. So what he observed, which I'll talk about a little bit when we see the ladders, are the European Banking Index, FESB, went bid very aggressively in line with the bonds. However, the stocks and DAX both lagged this quite considerably. So as the bonds were pushing higher, the European banking stocks were pushing higher and still going. The stocks and DAX hadn't really moved that much. So that's where there was a real opportunistic execution as a trade of the lagger in this situation, which will see him do quite well. So I'm going to jump right into the ladders, and this is queued up for 12:45. Just so you can pay attention to which ladders we're really looking at. We're looking at the Bund, to some extent the Euro. As you recall, for these events, the Euro and the Bund are inversely correlated, so they can be used quite well to see any kind of change or pivots in the kind of correlated market flows. And then also the DAX here. But you'll see in this box here, we'll see the stocks orders going through, as I mentioned before, which will tie in and kind of fill the gap for the extra P&L which we see. So just to recognise his starting P&L, he's pretty much flat on the day. He's down 6k, but that's a bit of that's not really very much. So mainly going to pay attention to these three ladders. We're also going to look later on at what the bobble does on a comment at the end of the day. So really going to try and smash through this quickly now. So this is queued up. This is going to be played at normal speed. Going to see him. So initial headlines dropped. He's in with 180 lots short in the Bund. Goes on side sort of 10-15 ticks or so, adds a little bit more. However, you can just see as some support comes in between these 13 to 22s area, he pretty much feels he's going offside, recognises that final line in the headline is a bit kind of different, scratches his position. Makes very little amount on that. But then as we see, watch the euro start to catch a bit of an offer. He's gone long in DAX and long in Bunds, as he's noticed the banking index has taken off already and holding a bid, and now starting to build quite a big core position in Bunds, around 240 lots. Quite heavy position in DAX at 60 lots as well. But what you'll recognise is it doesn't go really on side immediately in the DAX. He kind of has to give it a little bit of space. It now pulls back after going 10 ticks on side or so. So it just shows his commitment to understanding that, look, the banking index is still pushing higher, Bunds are on the highs, I'm really going to kind of stay committed to this DAX position. But, he's going offside quite heavily in that now, sort of 15 ticks or so. But what he said to me is he was reluctant to get heavy into the stocks until he got on side in the DAX. So he's on side 3 or 4 ticks in his Bund position. The DAX, I think, just made a new low, but only just. So very difficult to hold that position. Just shows how committed he was to this idea. It's very easy to get squeezed out of that. But as the DAX starts coming back towards his average entry, as we'll see that coming back into the screen in a second, and bonds start to push higher, we just start to get a bit more traction coming through. So actually at his worst, his P&L, he was down about 25k or so. But now DAX is starting to, gain a little bit of traction from the long side. It's coming back towards his average entry. He's taken a little bit of loser on perhaps half his position, but as he goes back on side, he adds in again, back up to his 60 lots. So he's now on side in both positions. He's also executed long in stocks as well. I think it's about 200 lots long in the stocks, because you can see his net long position is around 400 lots. So between the bonds and the DAX, I think, he's pretty much 200 lots long there as well. So these trades are quite nice, because what he says to me is it's quite good when you get these opposing moves, because initially people are selling, and then as the move turns, you've not only got the new participants who are coming in off the back of that final line, the potential tiering and extra stimulus, but you've also got those caught short that are going to panic and sell as they go offside, as it comes back through the opening price, the start of the move. So really now he's onside in both markets, quite comfortable, as we see him often do in the Bunds. As he gets on side and he starts to see the flows really pick up, he's not scared of adding more into the highs of the move, and as always, getting in with his size and then scaling out with smaller orders left on the offer as we move higher. So we still haven't seen the equities really released yet. If you look at his average entry around 18s, it's only now he really lumps in, gets even more aggressive, up to 560 lots across 3 markets long, in stocks, DAX and the Bunds, and really that's where he capitalised. I think one error that he did say that he did was, as the equities started to take off and he felt that there could be a real massive release, he was piling into the high quite heavily in stock. So a bit frustrating that we can't see it here, but his P&L high, I think, went to about 220k or something like that, and then fell back down as he got just a little bit too carried away, a little bit too aggressive, pushing into the highs. But as we can see here, sorry, that's happening around now. So he's up to about 220k, 230k up on the day, and you can see he just held on to those equities positions just a little bit too much as they started to pull back, and he's just trying to work himself out, but giving back a little bit of his P&L in that period. So these are all just small things that he was nitpicking against when he was talking to me. Obviously, he's still up 170k on the move. So from my perspective, it's pretty outstanding. But, you know, we always see from our elite trader, he's always trying to kind of, you know, refine and pick holes in his execution just to make it that little bit better every time, just improving a little bit more. So what we can see now, he's reluctant to really get too heavy adding into the highs in the bonds at the moment, but he does, I think, continue to kind of maintain a core position throughout the kind of majority of the move. We can see, as I mentioned before, euro is through the lows, so as long as the euro and the bunds are at their extremes, he's quite content with keeping something in. You see he's added back into 150 lots in the bunds, while he's maintaining kind of good average entry positioning relative to market. He's very comfortable in this position, and we've said this many a time before, to him it kind of just seems like it's a game of maintaining his average entry within 3 or 4 ticks of market, and he's quite happy to kind of hold his core position so long as all the markets are at their extremes. He's just got long in the BTPs as well, which I don't think, from recollection, this trade works out particularly well, but I think that's just evident of he's always scanning other opportunities across other markets. You know, what markets haven't gone as far, what markets still have kind of moves left to take, but it also demonstrates, you know, not every trade that he takes is a winner, but across the board, you know, the grouping of the trades across the correlated markets, you know, has an obvious net positive result. We can see when he initially went on side in the bunds, the DAX position went against him, but the fact that he had a fundamental kind of reason to hold on to this position, and 2 out of the 3 kind of correlated or key correlated markets were doing what they meant to do, you know, it gave him just that extra reason to stay long in his equities position, which really opened up a lot of P&L when that move really started to come through, and he went on side and he could get aggressive adding on side in that position. So if you recall from the 5-minute chart, in fact I'm going to bounce back to that now. I'm not going to watch this all the way because we've got quite a lot to get through, and I want to make sure that you see it, but he pretty much hovers around this sort of area in his P&L. As the bunds carry on rotating higher, he kind of, you know, he takes a little bit out, gives a little bit back, but pretty much just solidifies, you know, the P&L that he's made in that first kind of real high volatility move. So just going back to here and looking at the charts, so you can just recapping, he was short here and then got long and kind of rode this position up. And as you can see, the inverse happened in the euro, which he wasn't trading in, but it can be used as a good proxy market. Euro went up and then came back down and then released as all the buyers were squeezed out and new shorts come into the market. Now what we're going to look at now is how it executed during the press conference. Now, again, if you recall back to my initial debrief, we spoke a lot about how Draghi, he started off kind of supporting the dovish tone, the statement that was seen in the headline release, but he didn't really deliver enough to support the markets that, you know, the market went bid off the back of that was something different. You know, they're going to announce tierings. This is a preamble to them doing something big. And when Draghi didn't really do that, we can see a big reversal in all of the correlated markets. So we're going to see how he executed on that. Now, one thing that he did say about his execution on this is that it's something inherent in all of us when we're trading. When you have a big trade, a big winning trade, it can sometimes cause you to tighten up. And I think that's what we'll see here. What he didn't want to be doing is, as the market reversed, he didn't want to be caught selling aggressively into a market that was showing at first that it was going up. So he self-admittedly didn't really capitalize to the extent that he would have liked on the following move that came out. But I think that's still quite interesting to be able to see. It's something that, you know, happens in all of us, yet we're seeing it on a much more extreme scale to what the majority of us trade. But we're just going to watch how he kind of, you know, attaches himself to the short, as Draghi's comments really don't give enough kind of substance to that dovish headline that we saw at the 12.45. So these are more the headlines, but again, this is all included in the debrief. Some of the market structure that I spoke about in the debrief as well was just that we had some key areas that came in. If we broke below the 15s, you know, there was good targets to trade down to, I think, this area, the 75s. And what we're going to see for the extended move, we're going to pick up around this sort of area in the bonds. So the market had kind of ground higher into the presser, and similarly in the euro, market had ground lower into the presser. And then as the market kind of gets unsatisfied by Draghi's comments, they both start to flip, and we're going to see how he executes in both of them. Equally, we can see the same thing in, this is the stocks and DAX charts. So you can see that initial move where initially went offered on the headline and then bid up, but quite a sharp retracement back to this level, which was shown by when I was talking about him getting high, quite aggressive into the highs, cost him a little bit, as it was quite a sharp pullback before grinding higher. But this also rolled over and really everything released. It was one of the biggest kind of moves that I've seen on an ECB, and really interesting one to watch how he executes. So again, looking at the Bund mainly, so it's actually long small at this time. Paying attention to what the euro's doing as well here, because it gave, you know, a really strong indication when the euro really started to push up and the bonds offered, and it coincided with Draghi really not kind of really not delivering the dovishness that the market expected. You see some real flows start to come in, but it kind of took a little bit of time, and we see that sort of price action in the kind of liquidation type moves where there's still longs who are being quite optimistic that this is going to carry on going higher, but as they start to lose faith and then start to get out, it kind of creates a bit of a snowball effect until we get these big flows start coming in, especially seeing as we're trading so high in the bond space at this time. So he's up 160k, as we'd seen him finish up around the end of the presser. I'm actually going to fast forward this just because there's so much to see. I want to make sure that we can fit it all in within the time that we've got. So this is up to 4 times the speed, and it's going to give just kind of indication of, as the longs failed to work, he started to get short, but only up to 44, 45 lots. And he never really goes on side that quickly. And what he was saying to me was, because he was kind of getting out of some of his position, hesitant to be selling a market that's pushing higher, you know, he never really managed to build that larger call position that we've seen before. You see he's just taken a small loser on his first attempt at the short. Euro, he started to gain a little bit of traction to the upside. And as this does finally go, it's so aggressive, but you're seeing 500 lot just stepping down there, offered at 80s. Some bigger clips starting to come through, so he'll get in with one clip. That's an 80 lot for him, but scaling out quite quickly. So as that flicked down, he's quite quick to kind of get out of this position, which really what we'd normally see from him is as he goes on side, he'd be looking to add more, similarly to how he did when he was trading the long on the initial move. So really quite tentative still at this moment. You know, just increasing his position slightly up to 50 lots. But as he just gets squeezed a little bit offside, he's just scaling out with 10s. So, you know, not really getting too aggressive at this moment at all. Equities still holding a bit of a bid. So up to 100 lots now, short in the bunds. Now starting to apply his more aggressive tactic of when he goes on side, scaling out of some, but then adding in, so he's trying to build his core position, but still out relatively quick considering he's down to 18 lots already. Now you've got to bear in mind that during the press conference, at any time Draghi can say something which can be taken as really dovish and the market could kind of spike against. So, you know, he's being pretty kind of prudent and pretty kind of sensible, but from his own perspective, he did say that he wasn't, you know, as committed to being as aggressive as he would normally be. And again, just entered a short position, but just kind of sprung against him pretty quickly, averaging himself out of this position a little bit now in the bonds. You know, he went offside with sort of 20 lots or so, up to 90, 100 lots, and then scaling out quite quick. And really now is when, I'm going to pause it quickly, just start to play this normal speed. Now is when everything just really started to release, but he's only got a relatively small core position at this time. He's up 180k on the day now. You can see he's just removed his orders to get covered on, to get filled on the bid, which kind of shows that he doesn't have as much size on as he would have liked. He's a bit reluctant to get out of it too quickly, trying to just add in with sort of 10 lots on kind of pullbacks in the rotation. But generally what he does very well in this sort of situation is he builds a core position, you know, he's willing to kind of scratch or take, you know, some off the table as he goes offside, but he's always trying to build that core position so that when that big flow does finally come in, he gets really rewarded. And on this down move, you know, I'd say that this is kind of one of the instances where when the timing's a little bit out of sync, which happens with me so much, it can kind of just cost you the meat of the move, having the right size on at the right time when that flow really does come in and the market just releases it a little bit. So I'm just going to speed this back up to 4 times the speed. So he's up to 130 lots, but really as soon as he gets his size on, he just goes offside a little bit. But 100 lots here, you know, Euro's really starting to push higher now, you can see, as the bonds start to roll over, but they've already come off quite a bit from the kind of 80s area that they were before. So now he's on side, his standard procedure of adding on side up to 150 lots as the bonds really release, but really when they finally really do get going through the lows of the day, he's trying to get filled on a little bit more here, but reluctant to kind of sell into the lows, seeing as it could have quite a vicious bounce. But really that was quite a huge move. And he's starting to work into the pullback now, wanting to try to kind of build something for if we do get a second rollover. But that section of the move was pretty much where the cleanest break occurred, between the sort of, you know, 60s to 25s sort of area. So again, just working the pullback here, but not really getting on side. It's still pulling back more and more and reluctant again to be selling aggressively into a market that's just come off now, really, what, 50, 60 ticks. So it's quite dangerous in these kind of high volatile conditions to be really selling lows aggressively when really a lot of the downward moves have been retraced heavily recently. So he's still trying to work short in this kind of 40s to 50s area. Market starts to roll over again now, but again, just as he gets his kind of size up above the kind of 100 lot sort of mark, he just goes offside sort of 4 or 5 ticks, and he's so good, so kind of quick to cover a proportion of his position, knowing that he can get back in if he goes back on side. But what you'll never see him do is go offside sort of 10-15 ticks, you know, with a 100 lot or with big size. He really just cuts his loss quite early, knowing that he can get back in quite quick. So this is where the bonds really start to release now. It's kind of like in panic mode. It's obviously all moving quite fast because it's at 4 times the pace, but broadly you can see the market just keeps getting pushed down lower and lower, people kind of panicking out of positions. Euro through the highs, and the bunds take another leg lower. But again, just quite frustrating, never really on for when that big release comes. So now it looks like the lows are going to go up to 300 lots, but scratches about half of that as it pulls back. And it just takes a few attempts to take these 13s. It's quite frustrating, rotating between 12s and 23s before it finally goes. But it just sort of shows here the persistence in that move really allowed him to take advantage when it did go. You can see this is when the panic comes out. The market moves down, and I think 84s is the lows. And what he was saying here now is he's only holding a 1 lot short in the bund, and this is synonymous when he doesn't want to buy yet because he's just cautious that there's going to be another leg lower because he wants to fade the move, but he doesn't really think it's going to go any further. So just a bit of an insight into what he's thinking when he was holding that 1 lot. You know, that is showing him thinking that this is the end of the move, but he's just a bit hesitant to considering how aggressive the move was before he starts buying. So he's starting to buy now, starting to trade the kind of retracement of such an overextended big move, which is the right trade, but again, it didn't really happen as quickly as it normally would do. And I think the fact that he wasn't so aggressive in this area made the trade a little bit harder for him to kind of really get aggressive into when he's already traded sort of 20 ticks up from the low, because you're pretty much exposing yourself. Your risk really, or where you're wrong, is going to be below the low there. But again, you know, this isn't necessarily my kind of critiquing. He's up 250k on the day, so really kind of capitalised on this event. And now just trading relatively small size. You know, the big meat of firstly the move up, which he took advantage of, then the big move down, which he took advantage of, but with smaller size, and now the kind of retracement of that big move down, which is again capitalising on, but with again depleting his size every time, which effectively locks in his P&L, because if he's always trading smaller size, as the kind of opportunities become more and more distant from the main event, you know, he's generally kind of locking in what he's already made. So I'm going to stop that there because there's one more thing that I want to get to, which is this afternoon. It's quite often that on ECB days we get some ECB sources comments late into the afternoon. I think I was actually delivering the speech when this came out, so I didn't see it, but we can see he's at around 225k, so he's given a little bit back from his P&L high of about 250, which was a couple of hours before. But everyone on the floor waiting around just for in case a sources comment comes out, especially because in this situation, it kind of didn't make sense. It seemed like it needed a little bit more clarification. The market interpreted it as really failing to deliver on the dovishness of that headline. And quite often that's when ECB delivers a sources comment to kind of clarify the situation, stabilise the market somewhat. So we can see the comments. ECB policymakers have been presented with option of moving to targeting average inflation. Okay, that's nothing new really. Some ECB policymakers still need to be convinced about tiering system. Okay, so that's kind of a little bit against the dovishness we saw of the initial move, but he didn't commit to anything about tiering. Draghi didn't commit to anything about tiering during the press conference either. ECB buying stocks, bank bonds seen as non-starter. So this was an opportunity to actually sell the equities, which he didn't do because these two following comments, more government bond buyers, guidance also likely, this final one, ECB policymakers see deposit rate cut in September as also certain. So anything that really ties itself specifically to rates, that's generally going to have the most aggressive move, and it's going to have the most aggressive move in the short end of the curve. So we're going to see him now executing quite heavy in the bubbles. Now, it doesn't actually work, this trade. He executes in the bunds as well, where he manages to take a winner, but actually goes offside immediately. I think 5 ticks offside with maybe 500 lots in the bubble, but just manages to hold on to the position long enough to kind of scratch it and work himself out as the bund kind of pushed higher. But I think this is just evident that a bit of mixed signals across the kind of 4 headlines that we had. Even the equities, from recollection when I went back to look, the equities didn't go offered hard on this. I think they took quite a bit of time, and really, although the bonds did bid up, it wasn't the sort of move that you would potentially expect, and really it was kind of one of those ones where the sources, the moves that you'd expect the sources to deliver don't always come about. And it's just interesting to see how he manages this trade, how he holds onto that bubble trade when it's really under quite a bit of pressure with such big size. So we're going to see this play out now. I'm going to do this in normal time, so normal speed, and really pay attention to this bund and bubble ladders. So you can see he's in with 160 lots in the bunds very quickly, up to 320 lots, and then up to 480 lots in the bubble. So he's up to 300 lots in the bund, really got a great entry before anyone seemed to even react with 160 lots. So really super quick there, which kind of saved him across the bubble as well. But you can see now he hasn't managed to take anything out of his bubble position, and he's drifting offside 3-4 ticks. And it's only the fact that the bunds are still kind of drifting higher that really kept him in that trade. But anything about rate cuts, you want to be hitting the bubble. If you had the shats, you could have hit them as well, but really they're not as flowy a market, and they're not really a market that our elite trader, talks about being overly comfortable with. I think he can generally get more out of the kind of freer flowing markets such as the 5 and 10 years. So holding on to this position now for a good minute or so. He's laid his offers in the bubble above his entry just in case he gets one splash through. He's got 20 lots laid there. But you can see it's gone very quiet very quickly, and this is quite a difficult position to be in, something that certainly I need to work on. When you've hit the right trade, there's no reason for the market to go down off of this, but quite often it kind of gets overcome with people covering their trades, which just squeezes the market down a little bit. But inevitably, when everything comes back to settle after the comment, it's quite often that it can kind of drift back towards the average price, or certainly where he was getting in at the high. We see now bubble just ticking up towards 79s. Takes quite a bit of time. It's always painful to hold this sort of position, just in case the market just takes 3 or 4 ticks lower. and especially you've got to remember this is at 5:35, so it's after the Eurex cash session, so everything's generally quite a bit slower, a lot less volume goes through, the market's a little bit thinner. So you see now still willing to get long, adding into his Bund position as the market starts to kind of revert back to the high of the rotation from the initial move. Up 255k on the day at the moment, and I'm just going to fast forward this now just to see how he manages this large bobble position as it goes offside. So it starts coming back, but really as it gets back to his average entry, from recollection, when it doesn't really manage to kind of pop through, and the offers look quite stacked, against it, he's now upping his clips on the offer to 60 lots where they started at 20 lots. So just sort of showing that he's stepping down now with 60 lots, one tick below his average entry. He's willing to take a little bit of a loser or scratch his bobble position, as it's not really shown that it's going, off the back of him doing quite well in the Bund. So it really just shows like the discipline in holding onto that position, not panicking out, really kind of saved him a good 25k or so, just in that bobble position. And that's really the little things that you can work on your own execution, where there's no reason for the market to go offered and the correlated markets are still pushing higher. The bond's still looking quite bullish off that comment. Try to stay with the position as long as you can. Obviously you wouldn't want to see it making a new low or going through the opening price, the start of the move, but as long as that's intact, give the trade a bit of a chance and allow yourself to get paid. But you can see this is 4 times the speed and really slow, just not much going through, not much size going through in the Bund at all really, and it's just synonymous with this kind of like this post-cash futures session. Okay, so I'm going to leave that there. That pretty much kind of sums up like an outstanding day, up 270k. I think he maybe makes a little bit more trading gold at that moment, just with small size, but really just pulling together what we've seen there. We've seen him not get too stuck to an idea in any of the main moves that happened there, where the market initially sold off and he got short. When it came back and the offer just couldn't hold, he was like, right, I'll cut this, I'll see what the market tells me, I'll see what the market is telling me it wants to do, and then gets aggressive as it goes the other way. But just some key pointers to take note of are, when people are caught wrong-sided on those moves on the ECB, so if you do get that initial spike down, it can have quite an aggressive reversal as you get an unwinding of those shorts. And equally, the same way that we rolled over in the Bunds, as Draghi kind of failed to deliver on the dovishness throughout the press conference, it starts off as a bit of a slow sort of trickle, and then as the euro starts to push higher and both markets start to gain a bit more momentum, people start to realise, okay, I'm either caught long and I want to get out, or this could be rolling over. They recognise the pattern, they recognise that there's a lot of long positioning that would need to unwind if he was to really kind of backtrack, and that's when we see those real aggressive flows to the downside. And I think something's worth paying attention to, specifically now, off the back of us being so high in the bond space. Eventually we're going to get a day where the market really rolls over and we see some unwinding to the downside, and if you can recognise that sort of price action where it's so aggressive, it's taking out big levels, you're seeing big clips come to market, and you're seeing the offer stacked lower and lower and lower with lots of size, it's showing there's real intent, a little bit of panic, and the market can just always go a little bit further than you think it will go, like it did in this case. I think one thing he did reiterate to me was he didn't really in any situation expect that the market would sell off as far as it did, all the way from I think 174.80s to around 173.80s. So there was a good point move in that, but you can't expect to be on the whole of every move, but it's all about getting your size on for that main proportion, that main flow that comes in. So I hope you enjoyed that. Really kind of good to see. You know, our elite trader really performing to the top of his ability and pushing further and further and further. And we're going to see similarly some amazing execution across the July Fed. So that occurred 31st of July last Wednesday. So next week I'm going to review his execution on that. And again, just another kind of demonstration of really amazing flow trading by one of our best news traders that we have. So trade well, and I will be back with you next week with another execution stream. Cheers.